Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty Podcast. Excited to be here with you today. We have an excellent show all lined up for you. My good friend Gene Guarino from RAL Academy will be joining us in just a minute to talk a little bit about residential assisted living and what that really means and how investors can use that as a tool in their tool belt to diversify and see some additional cash flow. So you want to stick around for that interview. It's awesome. It's going to be an awesome 15-minute interview. I am so excited for that. So we're going to talk about that with Gene Guarino. Well, afterwards, we'll talk about how each generation today, your baby boomers, your millennials, and then, of course, your Gen Xers, how they prefer to live. Are they renting? Are they buying? What's the trend? What's going on? And then more specifically, what you can do about it and maybe where the opportunity exists. Last but not least, we'll talk about if there's an inventory issue, how can you do deals today? That's what's coming up on the Think Realty Podcast. You want to get in touch? Go to thinkrealty.com/podcast to make sure that you ask your questions there as well. You can find me anywhere online on social, on LinkedIn or Instagram at Abhi Golhar. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. And Gene, welcome to the show. How are you doing?
I'm doing great. Thank you for having me.
You got it. Good to see you finally, right? Which is good. Now we've the video thing going, which is always a good thing. That's awesome. That's right. I know, like, you and I were bantering kind of a little bit back and forth. And you're like, man, I got to change into a shirt. I'm like, okay, for a handsome, successful guy like you can kind of wear whatever you want, right? Like, that's not a problem. I'm still just receiving information. So let's go ahead and get that started. Excited to interview you here for a few minutes. Tell us a little bit about who you are and what you do at RAL Academy.
Sure. I've been doing real estate for a long, long time, and that's one of the things we love to talk about. So real estate, been doing it since I was 18 years old, and that was a long time ago. First house, I was 18, first commercial, 25, been doing lots of businesses since then. But it wasn't until about 7 years ago that I heard about residential assisted living from a heart standpoint. I heard about it from a business standpoint 20 years ago, but it wasn't until my mom needed help that I realized this is such a crisis, yet an opportunity. So that's what I do, is residential assisted living. We turn single family homes into assisted living homes.
That's incredible. I mean, from a overall strategy perspective for real estate investors, this is a really good opportunity. And I've seen you speak, and I'll sit either in the front row if I can find any available seats in the front row. Actually, I'm lying. I can't find any seats that are available in like the first 5 or 6 rows. I have to go all the way to the back, and I'm like the guy that's standing on the chair taking notes because it's so good. So help me understand what the major differences are between assisted living and like a nursing home.
Sure. Well, there's 3 levels. So let's start with what you would call independent living. So that's age restricted, adults only. That's where it'd be 55 and above. There's golf and tennis and pickleball. That's not what we do. And then there's the nursing home, which is all the way at the top. So that's doctors and nurses and gurneys, and it's medical. And that's not what we do. So we're right in between. It is providing a home and it's providing care, but not medical care. So it's 24-hour care with caregivers that are trained and qualified according to the state. It's taking care of those elderly individuals. The typical age is mid-80s. They need some help, but they can't take care of themselves at home. They don't need doctors and nurses every day. So it's somewhere in between, and we do it in a residential setting. So home versus a big hotel-like or apartment-like complex.
Gotcha. And so what got you inspired to do all this? Because this is not your flip. This isn't a buy and hold, like single family rental with a single tenant. This isn't a large commercial building. Like you said, it's not a big box nursing home facility. This is a very unique niche. What got you inspired to do this?
Yeah, I think when I first heard about it, it was 20 years ago when I heard somebody talking about it from the real estate perspective, saying how this is going to be the place to be, a great business opportunity. That's where my business mind kicked in. But it wasn't until my mom needed help that my heart side kicked in. It's like, wow, I need this now. So that's when it all came back to me. And I had heard about the idea of turning a home into this assisted living. So it is a real estate play as well as a business play.
Yes.
And you can play either or both, and I do both. And that's what we teach others how to do as well.
That's why I love McDonald's, right? Like the food is okay, but they've been able to master the business side, the paper asset side, and the hard asset side, right? So that's why I love your business model, because it's not only a piece of real estate, it's also a business. And not a lot of folks can even say that about their single family rentals. So I think that is kind of a very unique identifier in the overall business model. So let's talk some numbers. On a single family rental, let's say I'm buying a property for $100,000 and this property rents out at $1,150 a month. Realistically, if I just apply the rule of thumb, 50% in expenses, I'm worst case cash flowing $300, $350, $400 a month. And again, a super simple example. What does the money look like in assisted living, the residential assisted living side?
Yeah, and let's compare that, because you just spoke about a real estate play versus the real estate in the business. Let's just talk the real estate play first. And so that single family home, first of all, to find a $100,000 house that you can rent for $1,150 is getting harder all the time. But even if you could, once you account for the debt service and everything else that goes into it, I think you're probably closer to maybe a couple of $100 a month versus $5. But let's say it's a few $100 a month or per unit, per door if you're doing apartments, which they shoot for $75. That's pretty much their number, as if they can net $75 a door on apartment buildings. So what we do is a little different, where you take that same house and think highest and best use, using that house to rent to not a family for a year or two, but to a company. And I say company because that's how I do it, separate entity, a company that's going to lease the home and operate this residential assisted living business out of it. Now, it is a residential home. It's in a neighborhood. You can do it. HOAs, building codes, Fair Housing Act, all of those things. We can talk about that. But it's in a residential setting. It is a home. It's a group home for the elderly. So that person who's operating the business, the residential assisted living, they can and would, if you're willing to ask, willing to pay more for that house and maybe up to twice the market rent. So let me just pause for a moment. Instead of renting it for $1,150, let's say you're renting it for $2,300 a month. Mm-hmm. The extra $1,150, that doubling of the rent, is pure profit plus the couple $100. So you went from a few $100 in positive cash flow to $1,200 or $1,500 in positive cash flow just on the same real estate asset.
That's insane, right? Like, interview is over. That's blasphemy. I don't know what you're talking about. I'm out. Can we stop this? No, I'm totally kidding. I mean, that sounds very, so I love that, but it also sounds very unrealistic for a lot of investors, because they're like, whoa. You're telling me, hold the phone here. You're telling me, right, you already know. Is this legal? Right? Like, what are the rules and regulations that I have to follow to like make this possible? Because I need this cash flow in my life so I can have a Ferrari fund, okay? It's the Abhi's Ferrari fund. I know exactly what kind of car. I don't really buy doodads, as Rich Dad would say, but you know what I mean. What are the rules, regulations associated with all this?
So let me, because you're exactly right. We have to get past that unbelief, because somebody who's listening to that might say, well, I can't even think straight because that doesn't make sense to me. Right. So let's go with this premise that you're probably not going to do it with a house that would be $100,000. It's probably going to be a house that might be $500,000, a much bigger, nicer house in a nicer area. That house itself would probably never cash flow from a rental perspective unless you're doing Airbnb or something more hands-on. So it's a bigger house, a nicer house, because the reason why, let's say the rent there for that $500,000 house might be $3,000, which wouldn't be enough to cash flow the house. But if you had somebody willing to pay $6,000, now it does make sense. So why would somebody be willing to pay $6,000 for that because we're going to be charging $4,000, $5,000, $6,000 per person, per senior who's living in that house. There may be 10 of those people. So 10 times $5,000 is $50,000 a month in gross income. So even if I'm spending $6,000 a month in the rent on the property that you own, you're leasing it to me, I want to sign a 5-year lease on that, because I'm going to have a business where I'm going to be netting $10,000 or $15,000 out of that $50,000 monthly gross income, even after paying you twice the market rent.
That sounds incredible. Like, all right, so so I understand that I cannot, it doesn't make any sense to do this with a home that I'm going to be all in, say, between $75,000 and $100,000, right? Like, that's pretty, for me, that's pretty self-explanatory. I want a house that has size to it. It has the backyard. It has all of these things. So I'm looking at the $400,000 to $500,000, $550,000. So, folks, I know that I've talked about, if you're going to buy a single-family rental and it's a long-term play, then you should be looking at between like an $85,000 and like $140,000 price point, right? Like, that's what you need to be doing. But if you're deploying the strategy that Gene's talking about, you can scale up, right? Like, you can buy something a little bigger because you know you'll have the cash flow to support it. So, Gene, talk to me about the operations here, because this is now the business side of the real estate we're talking about. What do I need to know? What do I have to do? What's the breakdown? What's my big takeaway if I say, all right, I'm in, I'm game, I love this $5,000, $6,000 a month in free cash flow. What do I got to do?
So I'm going to break it down into 3 different ways. The idea of, number one, if you were just investing and want it to be a very passive investment, you write a check and you're a private lender or a joint venture partner, that's very passive and hands off. The second way, where you're a little bit more involved, would be you own the real estate and you lease it to the operator. So it's still just a real estate play, long-term lease, twice the market rent. That's a beautiful thing. Make a few extra $1,000 a month. But the operations, which is what you were just alluding to, that's where the real effort comes in, and that's where the real big money comes back. So when we talk about what does it take to own and operate a residential assisted living, number one, it's a business. It's not just a real estate play. You can lease the real estate from your own entity, which is what I do, or from somebody else, which is fine as well. But the operations in that business, what that means is you have to have people that are there on a daily basis. That's not me. It's not what I encourage you to do.
Right.
But a manager who then hires the caregivers, who then fills the home with the residents, who deals with the families and so on. So your job is to manage the manager. You know, you mentioned McDonald's and the brilliance of that model itself.
Yeah.
And I always use McDonald's as an example. The person who owns McDonald's probably never shows up at that McDonald's. They may show up once a quarter, once a year, but the owner is at home. There's a manager who's there that's day to day, and they take care of everything below them. It's the same way I do it, the way I would encourage you to do it as well.
Yeah, I mean, and look at me, right? Like look at I'm 5'5" and like 120 pounds wet, right? Like, I'm not in any physical shape to do hard labor anyway. Like, I'm not going to do that. So I'm very much in your shoes, right? Like, I like this chair. It's nice and comfy. I don't mind managing the manager. That sounds about right.
Right. And that's exactly what I encourage people to do, because, you know, my manager, I love her dearly. She's very capable and she knows better than I do what to do.
Yep.
She is, and that's one of the things I always encourage. Here's a question I ask, Abhi. I say, how many of you want employees? And nobody raises their hand. So I said, how many people do everything yourself? And nobody raises their hand. Then I say, how many of you want employees now? And now 3/4 of the people raise their hand, because the point is somebody's got to do the work. And if it's not you, it's somebody else. I know you don't want employees, but it's kind of one of those necessary evils. So, all right, we have an employee, that manager who's going to take care of all of the employees that are below them, the caregivers and so on. But there's such a need for this. And that's the bottom line. Is I really want to encourage anybody who's listening and watching right now, is you're going to get good at something. You're going to do something for the rest of your life. The question is what and why. Right now, there's a huge, massive need, which is a crisis for some people and an opportunity for the rest of us. So the idea of these seniors that are going to need a place to live, they're going to need care, somebody's going to do it. Somebody's going to be making this money, and it may as well be you. Now, how you play the game, what part of the equation you want to be in. I just write a check and receive checks. I own the real estate and lease it with a long-term low impact tenant, or I own the business, but I'm not the manager or the caregiver. I manage the manager. That's completely up to you. But I also want to blow your mind even more. Let's scale this thing up. If you had 3 of these homes, each one making $10,000 a month net per home, and you have 3 homes within 20 minutes, that's 30 grand a month. And that's an average home. You can do much more than that. But that right there would pay most people who are listening and watching their bills right now. If you had 3 homes, each making 10 each within 20 minutes, your job is actually easier with more homes. You have the economies of scale with the manager, with the caregivers, with all of the everything else that goes with it. But now go even bigger to really blow your mind. Put 100 of those together, 100 of those homes. Now the big guys, the hedge funds, all of the big money out there that wants to get in this game, now they can buy what you've got, and they're willing to pay much more than you and I would be willing to pay for it. So get 100 of these homes and collect a check for a couple $100 million. That's the plan that some of our students are actually doing right now.
That's pretty awesome. So we've got to wrap up. Let's take another 30 seconds. I've learned a lot. I mean, assisted living, the differences between assisted living, nursing homes, and what it really means to operate this business. And the fact that this needs to be a tool in our just overall bucket, right? In our tool belt. We need this instead of just buying, selling, flipping, because what does that ultimately do? It leaves us with a net asset value of a big fat donut hole, something like this. And it's not good. It's not good. So the entire point of investing in real estate is to build wealth over time. Cash flow matters. Appreciation matters. And if you can couple both with a business very similar to the one that Gene has, you will totally be doing yourself a favor. So Gene, what's the best way that I can get in touch with you, your team, if I want to get more involved?
Yeah, as a matter of fact, we wrote a book called The Insider's Guide to Investing in Senior Housing. If your listeners, watchers would like a free copy, I'm going to give you a website to get ready to write it down. There's also a webinar if you want to learn more about what does it mean to be an operator there. And there's also an opportunity for you to have a discovery call, a conversation where we can figure out if this is the right play for you. Real simple website, RAL 101. RAL, which is Residential Assisted Living. So RAL101.com. Go there. It's all there for you, and it's free.
Awesome. Gene, thanks so much for stopping by and giving me a little bit of your time.
Thank you. Appreciate it.
You got it. All right, Think Realty Nation. So I'll be right back, but mull over what Gene had to say about residential assisted living and if it's worth it to you. And I have an inkling that you'll say it is. I'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. Millennials, baby boomers, Gen Xers, how do they prefer to live right now? I found an article on entrepreneur.com that kind of talks a little bit about some of these trends. Baby boomers grew up in a time when housing was affordable and everywhere. So for me, when I think baby boomer, I think they want to own a home. It's just kind of part of their DNA. And this is also a time when the American dream really took a hold on that mindset. And so, you know what? They're buying homes. They're not opposed to renting, but from what I'm able to see and from what I'm looking at in terms of data, you know what? Baby boomers, they're looking to buy, and also when they become empty nesters, guess what's going to happen? They're going to sell, right? My parents have been empty nesters for a little bit of time, and they're thinking about selling, and I'm like, no, rent the property, please. Don't do that. But I get it, right? They want to move to your younger areas, your hipper areas. There's a huge influx of folks coming back into downtown and midtown and Buckhead, Atlanta. Why? Shops, food, dining, parties, all of that. So that's really neat. Gen Xers aren't necessarily as flexible in their lifestyle and housing preferences as their younger generational counterparts, but they're not too far behind millennials, which is kind of interesting. The reason that Gen Xers are firmly staying in the rental market a little longer than expected, I'll let you guess. Higher rents is one, stagnant wages is two. And what does this kind of do? It sums up into making it harder to pretty much save for a down payment, right? That's right. So that's why they may be renting a little more. Millennials, somebody like me, I'm not really going to follow your traditional norms. And we're seeing that happen, especially with housing trends. So we're waiting to buy a little later, and we're kind of skipping that starter home and going more toward that $400,000 to $500,000, $600,000 range. We actually don't mind renting. Quite frankly, sometimes I feel like, well, geez, why do I need to own a home? Right? And that's where a lot of my millennial counterparts are also thinking, like, geez, I don't necessarily need that. I like the flexibility. I don't want to. So that's where the headspace for millennials are. While some millennials, quote, feel squeezed out of the housing market due to astronomical student loan debt, others simply just don't see the value in owning over renting. And I think that's part of an educational thing, but I also understand the debt situation, right? There's a lot of student debt out there. There's a lot of credit card debt, auto loan debt, subprime auto loan debt, and it's also sometimes a little difficult when you're paying all of this every single month on a note to also save. So those are some of the trends, the baby boomers, Gen Xers, and millennials on what they prefer to do when it comes to housing. This segment is brought to you by Real Property Management, which is the largest real estate residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. So let's talk about how deals can be made in any market. So when there's a supply and demand issue, something to consider, hard money lending, right? I'll give an example. Let's kind of rewind this for a second. If you're a flipper and you're in Atlanta or you're in Charlotte or you're in Chicago or Dallas and you're like, well, geez, I just can't find any deals. I can't find any deals. I can't find any deals. It might be the type of deal that you're doing. Over the last couple of shows for the Think Realty podcast, we've talked about distressed note buying. We've talked about residential assisted living. I mean, we've talked about some strategies that you can do right now in your market that will benefit you even when there's a tightrope on some of these opportunities that you're looking at. I live in Atlanta. I haven't been buying a whole lot in Atlanta. Right, so I'm looking at the secondary and tertiary markets. I could, however, be looking at distressed, non-performing note inventory. I could also be looking at assisted living facilities to get into that arena as well to increase my cash flow. So just because you're fixing and flipping and you're like, oh, shucks, I can't find any other fix and flip deals, maybe look for additional opportunities that are not fix and flip deals where you can see some cash flow, assisted living being one of them. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. So that wraps up the show for today. Listen, if you want to make anything happen in the real estate world, if you want to be a part of it, if you want to increase your strategies and you really want to grow your wealth, it's a matter of recognizing where we are in the marketplace and the overall market cycle and adjusting accordingly. For those of you out there that are not adjusting, you have an eyes wide shut mindset and mentality, guess what? You're going to lose, and you don't want that. Pay attention to what's happening around you, and that way you can guarantee that you can set yourself up for the future and eventually win. Have any questions? Get in touch. Go to thinkrealty.com. You can find me anywhere online at Abhi Golhar, specifically LinkedIn and Instagram. Think Realty Nation, until next time, happy investing.